Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gowden, jumping into the charts on this December 14th. So the long-awaited FOMC meeting is finally behind us. Realistically, Powell's tone was, I would say, more neutral. I think there's a lot of data he's interpreting that is kind of conflicting and just doesn't really know where the economy is. Given his stance, they did raise the Fed policy rate by 0.5%, which is what the market expected. But they did say they may have to take the terminal Fed fund rate up to 5.1%, which means the US 2-year should move substantially higher from this level if that is what they're going to continue to do. But clearly the bond market is not thinking that just yet, which may be a little bit of a caution signal. Not that the markets are going to rally, but potentially that the economic demand is weakening very, very drastically. Now on the S&P 500 here, we were up on the day, but we closed negative. You can see we rallied all the way up to this 405.60 and change level and reversed all of those gains. The interesting thing about this price action, and we were literally teetering on a knife edge. I was waiting to get this confirmation close break from this wedge pattern. And the fact that we basically closed at the wick low but did not close below that wick did not give us that confirmation signal of the breakdown. So right now, this wedge pattern has not confirmed the break, but if we get a confirmation tomorrow close, this wedge pattern has broken, and it likely means that downside will take us to the next support level around 390. Considering we bounce there, it won't really be that much of a major support level. Now, what I do want to touch base on is we have seen the volume increase substantially on the last 2 days here, and they have been sell-side pressure days. So specifically when we see the volume increase at a very, very strong resistance point, that usually means there's big money starting to dump into the smaller investors. If we take a look at the intraday action, this is very bearish, these two patterns. You can see you've had your initial bear flag over here, breakdown. You had another bearish all inside bar consolidation, sucking in new money, thinking we were going to close above this red bar high, and we failed again. And then this was basically the Fed raising their interest rates. It caught that initial sell-off. We had a little bit of a rally, all inside bar action, and you have reversed. The short-term positives is that you did close above yesterday's low. However, if you look on the daily chart, the negative is that you are back closing on the daily chart below the 200 moving average. So that is a little bit of a sign of weakness. I do think algorithms will pick that up. Tomorrow is going to be a pretty action-packed day. We have the ECB raising rates. We have the Philly manufacturing data coming out. And then more importantly, we also have two big economic reports, one being the initial job loss claims. That's the most important one. If that comes in stronger, expect the dollar and yields to rally, which will obviously cause a sell-off. And I'm in the camp that we may see the jobs number come in stronger than expected, which could cause this market to sell off. And one of the reasons I'm in that camp is because typically ahead of the holiday seasons, you have a lot of part-time seasonal hiring. And I do think that there's been a lot of seasonal hiring in anticipation of this Christmas holiday season as well as the Thanksgiving. So I'm leaning more on the side that the jobs number comes in better than expected, which is obviously negative for the markets as it would cause yields to rally. So again, the volume was good today. Trading just over 92 million. Yesterday was 123 million. So we're certainly picking up, starting to trade above this volume average, which is a really good sign because it means that we should get a directional move here very soon. Now, obviously, this week we also have Options X on Friday, so it's really difficult to analyze some of these stocks on an individual basis because there's a lot of calls and puts for people, and basically institutions will try to find that max pain level. But essentially there could be continued volatility tomorrow around 8:30 if the economic data is worse than expected, or I guess better than expected for the jobs. Then we could see a market sell-off on the back of yields rallying on a better than expected jobs number. If the jobs number comes in worse than expected, you may see a little bit of a rally in the markets, as that would imply the yields likely starting to soften a bit. But again, we're at this very tricky inflection point. Markets are kind of hanging on a thread, in my opinion. We're at this key resistance. We've been teetering with this 200 moving average. You can see this massive COVID trend line, which we're still trading under. We have broken this wedge pattern, but not confirmed it yet. And the fact that we've actually broken it twice, but you didn't confirm here, you recaptured that wedge and then failed and broke it again. I'm just waiting for that secondary confirmation close below this wick low. If we get that, then it likely means the probabilities are in favor for the downside. Taking a look at oil, WTI has had a strong move, an impressive 2.95%. In my opinion, I was close to executing a short, but I was potentially waiting for one more little pop-up into this resistance trend line. You have had a beautiful 3-bar surge off of this technical support level. You can see this beautiful trend line connecting this was your big sell-off from the war to your major pivot to your major pivot, and you also have this beautiful little consolidation area of chop which acted as support. So oil, I think, has had its bounce. I do think that we're going to see lower price action. Taking a look at natural gas, our natural gas trade is currently in the money pretty deeply via the KOLD. Obviously, today's price action is pretty important because you did fill this technical gap. Now the question is, and what our job is as market technicians, is we have to decipher, is this going to be just a simple retrace back to this breakout trend line, which puts you at around $6 and change, and then do we get a bounce, or is it going to slice through this and start the next pattern down? Keep in mind that we do have this bigger, larger M-top pattern in effect, which does favor more downside. And if you actually look on the weekly chart, this is a little bit of inside bar bearish consolidation, but you do have a weekly reversal signal here that you still have to take out. Now, I'm in the camp that natural gas still breaks lower. Potentially in sometime in 2023, I see natural gas hitting this 350 area. So I do think even if it does get a bounce, we can still hold this. But if natural gas has a sharp fall into this double bottom, I will probably look to pare back my profits on the KOLD. Let's take a look at gold. Gold had a little bit of whippy price action, but it did finish basically slightly negative on the day. You can clearly see gold still at resistance, but it is holding this resistance and looking to consolidate. So that is short-term positive. But again, I'm in the camp that gold has to retrace to 1721 before it starts its next big move to the upside. And this pullback in gold may coincide with the jobs data coming in better than expected, which could push the dollar up, which could push yields up, which should in theory soften gold. If we look at the DXY had a big pop intraday off of that level. There's potentially a little bit more downside on the DXY to around the bottom of this channel. Actually, let me just adjust this channel here. My channel is actually just slightly off. So if we do that, you can see, never mind, you can see we've hit direct support. You're still at a massive, massive support level on the DXY, this major pivot in 2016, and then you also have this beautiful pivot chop over here, your retrace before you basically broke higher, and you've just pierced a key Fibonacci level. So in my mind, the dollar should see somewhat of a potential bounce. Now I do have a pretty important trend line connecting all of these lows over here, which is where the dollar could be wanting to go around this 102.50 level before it has a more substantial bounce. But that's kind of what my expectations are. I think we're very close to a dollar bounce, which in theory should start to put more downside pressure on the markets. But it's interesting to see we had a initial pop which caused the markets to sell off, and then despite the dollar falling sharply and basically going back to the lows, the S&P did not go back to its highs. So you can arguably say that this was the dollar sell-off, that, you know, when the dollar started rising, this is what would cause the S&P to sell off. And despite the dollar basically going all the way back to the lows, you would have expected that the S&P goes to its highs. That is a divergence from the correlation, and it's a negative divergence from the S&P 500. It is showing and displaying relative weakness. So let's just keep that in mind. Let's take a look at the US 2-year yield. So now for basically the first time in history, the Fed fund rate is now in line with this 2-year yield. So this implies that the Fed has achieved their target in raising rates, and the bond market does not think that the Federal Reserve is going to raise rates any longer. Now, typically when the Federal Reserve stops raising rates, that's when you see the economy really start to drop off of a cliff. So now we're going to be looking, if this is the case and they're no longer going to raise rates, and that could change based off a stronger or weaker jobs number, but if yields start to collapse again in a sharp manner, that's signaling more of a deflationary potential event in the stock market and bond market. So let's just keep our head on a swivel and see how things progress there. Let's take a look at Bitcoin, BTCUSD. So Bitcoin's interesting price action because there's still 2 hours and 48 minutes left, but you can clearly see Bitcoin was trying to rally and then it reversed. It is looking to put in a beautiful topping tail, which would be a nasty, nasty reversal signal on volume. There's still 2 hours left, so anything could change, but currently this is a beautiful topping tail, and we'll just have to see if that holds. If that does hold, likely means Bitcoin is put in its near-term top, and we're going to probably test the low end of this range. Considering that you've had a breakout here, and if we get a failed breakout, biggest moves comes from failed patterns, and that does imply that we could see a sharp move lower in Bitcoin. Even if we look at Ethereum, Ethereum had a beautiful technical retrace. Look at this beautiful retrace, pivot to your chop over here, and look what you just reversed off of with another reversal signal on Ethereum. So interesting tidbits of information there. I think it's really interesting to observe that the bank stocks are starting to be weaker. You know, you're seeing weakness in JP Morgan, which was your leading stock before which was your leading rally before the S&P. So it's going to be key to watch these leading stocks that had the rally first and led the markets higher to see if they start giving us signals of breakdowns occurring. Now, this is a little bit of a topping formation. You are getting toppy with an increase of volume. So let's just see how JP Morgan and key bank stocks really start to play out here. If we start to see weakness in the banking sector, it will most likely start to put a lot of pressure on the overall markets. Let's take a look at, just scrolling through to see if there's anything else. We can touch base on the QQQ here. So tech again is basically still at resistance. Again, you did not close below yesterday's wick low, so that's a short-term positive for the markets, but you're still trading under this key trend line. Once again, we didn't get confirmation of the breakdown, and you are trading at major resistance. So there's tons of resistance still up ahead. You did tag this upsloping trend line over here, which means that potentially the upside move in the Qs are fulfilled. But again, unlike the most indices, the Qs have not tagged the 200 daily moving average, which makes me think that there is still a possibility that we could see that. But it's a big, I mean, obviously we're not short this market, so that's not my base case, but there's still a scenario where we could float up and see that hit. But again, like I said, I think we're on borrowed time. I think these markets have had a decent amount of consolidation and time to break up, and the fact that we've had now one attempt, two attempt, we're kind of on a little bit of a knife edge here, and I do think that the markets are likely to see a downside move sooner rather than later. Let's take a look at, I just want to show you the XBD chart. So the broker dealers kind of are also putting in a nasty reversal signal here on the daily chart. The broker dealers, again, lead the markets higher and lower. That was kind of my signal that I did think we were going to get a sell-off today on the FOMC because we had this candle formation the whole day. Realistically, this candle didn't change much throughout the whole day. You can see that it had a pop in the morning and then a drop, and it held that price action. So that is really interesting to observe, considering that we don't trade it, but this is just a more of a, it's an indicator for the overall markets where they're likely to trend to. Really, that sums about it for today. There wasn't much action that we did, just sitting on a couple positions. Obviously, we are still short mRNA, which is one of our newer trades. You can see that the volume is clearly picked up, but the fact that you closed basically back on this trend line, this red sloping trend line, and right at the yesterday's wick high, shows that we're not setting up for confirmation. And that means that I do think we're likely to see a move down to the lower range of this channel, which would put our trade nicely in the money. But nonetheless, Moderna is crazy extended. You've had a high volume move, lots of shares being exchanged here. I do think that whoever's been buying up here is going to be left holding the bag. You did hit some key levels. You filled the technical gap. You retraced to a couple key pivots over here. You can see this was a big reversal pivot on volume, which you tagged today, pierced through, but you weren't able to close above that. So short term, I do think that we should see some downside in some of these stocks. Even if we look at Pfizer, I mean, this is one of my favorite short setups. Just look at this extension move. I mean, what a crazy move from 41 all the way to 54. You know, when you see a rally like this is not healthy. It's very reminiscent of this rally here, except this was when we still had a bunch of QE in the system. Now we have QT, higher rates, so the dynamics have changed drastically. If we simply look at the weekly charts, even more amazing. 10 weeks of upside in a row into this massive red bar resistance, as well as your initial breakdown. So tons of sellers waiting to sell here. Looking at the volume trends, anemic volume in comparison to what you're trading up against, this does favor a breakdown sooner rather than later. In the minimum, I think we get a retrace all the way back down to this channel over here. Now, I don't know how long that's going to take, but I do think that we will see a retrace at the minimum back to this downsloping channel, which was your breakout zone. So that's kind of my expectations on the pharma stocks, but I do think that there's a lot of downside potential in some of these names. And when you just look at some of these charts, they're just incredibly mind-blowing as to how much they've rallied, even in the face of interest rates and basically a QT environment and a waning economic environment. So let's just take the day by day. Let's wait for that 8:30 economic data. And then obviously Friday with Options X, anything could transpire with institutions trying to put stocks at that max pain level. So we may not see a big sell-off tomorrow or Friday, but I do think maybe next week we will start seeing potential tax loss selling, repositioning, end of quarter, and we'll just have to continue to monitor things as it progresses. So that's it for today.